It doesn't matter which way you attempt to cut an €85 billion pile of debt, there are no shortcuts as to how this particular loan will get paid back. The task will certainly dominate most of Ireland's new coalition government's term of office, and whilst construction sites remain unfinished and cranes stand idle, no one can say how long it will be before this country shows any tangible signs of getting back on its feet. But Irish exports have a whole different story to tell, notching up a new record high totalling €161 billion in 2010. Along the banks of the River Liffey, flowing through the centre of Dublin, sits a major contributing industry to this export success story. The international funds industry also had a record-breaking 2010, boasting that the net asset value of Irish domiciled funds are now €963 billion. I've come to Dublin to ask three key players on the inside of the funds industry to explain how they can be so certain that the country's current conundrum of balancing the demands of one of the biggest EU IMF bailout packages will neither dent the industry's international reputation nor daunt its progress as one of the world's leading hubs for the domicile, distribution and servicing of funds. I start by talking to Fergal Woods, Director with Bank of Ireland Security Services. How can people doing business with funds based in Dublin be sure an Irish bank won't go bust?
Yeah, it's interesting. An interesting question from an Irish banking perspective. I think ultimately you've got to look to the support infrastructure that's been put in place for the Irish banking sector. I think yes, it has been damaged through the economic turmoil we've experienced over the last couple of years in particular. I do think there are better, and there are some banks are better than others, are better sort of positioned than others. But I think the support infrastructure that the government has put in place through its guarantee scheme and through the support it has already provided in terms of the Irish banking system, backed by the ECB, and I think even in looking at in liquidity terms the support provided by the ECB for the Irish banking sector, would tell you very specifically that there's a huge support mechanism behind the Irish banks, with a view to making sure they don't go bust. So, well, in looking at that, people will always have concerns because you're trying to get to what is the end game here, what are the underlying issues. I think the support infrastructure has been very visible from both an Irish government perspective and from an EU ECB perspective as well. So, with all of that mechanism standing behind it, I think people should feel very safe that Irish banks won't go bust.
I'm talking to Kieran Fox, Business Development Director of the IFIA here in Dublin. Kieran, anecdotally, we hear that it's harder, not to mention more expensive, to do business here in Dublin than it was, say, 2 years ago. If a company wanted to set up a fund here, in what ways have you made such a venture easier or smoother or made it more accommodating for them to do so?
Anecdotal evidence that we have on the street, and certainly from anyone that I speak to, is that rather than being more expensive and more difficult, that actually it's less expensive than it was certainly a few years ago. I think there are a number of reasons for that. I think primarily we've certainly heard evidence that employment costs are down significantly in Ireland, especially compared to other European jurisdictions. I think that obviously at the margin then of new employment that makes a difference. I also think that there's evidence that companies in the industry here have frozen. Some may have had salary reductions. But also non-employment costs have come down, and again at the margin that makes a difference. So I think by and large across the board Ireland has become more competitive in terms of its cost base, so I think it's cheaper to do business here. In terms of ease of launching funds and ease of setting up a fund, well, that's what we do continuously, is to work with the financial regulator and the Central Bank of Ireland to make the environment more accommodating, to make it more efficient. There have been various developments. For example, there were changes made to the Qualifying Investor Fund towards the third and fourth quarter of last year. To give you an example of one of those, the initial subscription level for a Qualifying Investor Fund was reduced to €100,000, and it was also reduced for a Professional Investor Fund as well. So there are a number of initiatives, and we're constantly working with the Central Bank to make it more efficient to set up a fund here.
In terms of attracting business, I think the regulatory environment has long been recognised as a very open and transparent, and also a very approachable part of our infrastructure. I think the regulator continues to be that. They still are well recognised for their expertise and experience in the funds and financial services area. I think at times the international press can actually mix that up with some of the local and domestic banking issues that we've experienced. I think this is quite a separate sector, and has not experienced any of the same issues that we've experienced domestically. So I think they are still recognised by a lot of people who transact business here as being very professional, very organised, and very understanding of our business. I think the way they've approached regulating our business has been very progressive, and I think people enjoy dealing with them because they're talking to somebody who understands the business and the commercial element of that business as well. So there is a very pragmatic approach and view taken by the regulator, and I think that is an attractive proposition for people looking to structure international business as well. So it's two elements to it. You've got the infrastructure to service the funds that has been here, and on top of that a much more cost effective infrastructure, and then separately the regulatory environment, which continues to be very strong but also very well recognised to help attract business and to make managers comfortable that you're dealing in a very regulated environment.
I'm talking to Jerry Brady, an independent funds director based here in Dublin, and I gather you've been in this industry here for the last 20 years, so you
That's
know
correct.
a fair amount about it and seen it through its various sort of peaks and troughs. What about on a more practical note about a lot of fund managers are sort of looking towards ways in which they can sort of balance their books and look towards costs of funds doing business here. Do you see these coming down at all now that salaries are dropping and other overall costs as well?
Yeah, I think salaries, rents, cost of operating in Ireland, all those good things thankfully have dropped, and I suspect will continue to at least stabilise. And Ireland has become very cost competitive. At our briefing, IFIA briefing today, we saw some slides to that effect. But I think the real issue is that the market will always dictate in terms of what is good value and not. And in Ireland we have 47 licensed administrators, so quite clearly there is very healthy competition, and quite clearly any cost savings can and will be passed on to clients. But the reality is that those same clients are becoming more and more demanding. We're seeing much more focus on transparency, we're seeing much more focus on daily dealing, we're seeing much greater complexity, much greater overheads associated with corporate governance and operating the funds. And I think the real issue is, will all these complexities add to increased costs, or will we have a counterbalancing of lower operating costs helping to modify any potential increase in costs? And I think that is the case. So I think it's too easy just to simply say, well, lower operating costs, lower costs to the client. I think that the more realistic sort of approach to this would be to recognise that we won't necessarily see the increase in servicing costs that undoubtedly will be the case in some of the much higher cost centres competing with Ireland.
Have you got a lot of businesses knocking on the door to come and set up here, or do you have to go out there in the world and find them and coax them in?
Well, it's a little bit of both. Thankfully we have people who want to come here and set up here. But we will always go out looking, we will always seek to spread the good news and spread the message that from an experience and an expertise, innovation and reach and distribution perspective, that Ireland is a fantastic place to do business. It's a fantastic place to set up a fund. It's a fantastic place to have a fund serviced from. So we have a number of global roadshows. We go to London very regularly, we go to the US on the East Coast, we go to the Middle East, we go to Asia. So we're always out trying to spread the message. To give you an example, last year in 2010 there were over 700 new funds or sub-funds launched in Ireland. Data from Lipper Fitzrovia for 2010 showed 70 new fund promoters established funds in Ireland. They were from 14 different countries throughout the world, and the assets in those funds at the end of the year when Lipper did their snapshot was $21 billion.